Hello, everyone. Welcome to another lovely episode with JayFx House. This is the official episode 3 for the Wyckoff Mentorship. And on this episode, we'll be discussing more about the distribution. All right. So on episode 2, we discussed about accumulation and, the concepts within them. So today's episode, we're discussing more about the distribution and also its relation to the redistribution, which is the pattern you see me identifying on my screen. This is not a distribution, this is a redistribution. Okay, so, and I'm also going to be giving you the difference and why they have two different names. And yes, it's logical and it's reasonable. So by the end of the video, you should understand the difference between two of them, why there are two of them, why they have similar names, and how you can use them to trade. Right. So the whole idea of studying Wyckoff is to be able to understand the market movements and the phases of the market, so you can know how to spot areas of interest and also confirm your analysis from whichever method you're trading with. So it's not supposed to change your system of trading. No, it's instead supposed to morph with it, which is basically adding a new perspective to how you view the markets. This method has been a very, very old technical method. Basically, what I'm trying to say is a method that have been used over time by professionals to understand the markets in a very, difficult time. Like, as you all know, since January, we have had a very, very crazy price action. This is not your average higher high, higher lows or any of that. It looks very, very, very crazy. So you need most of these methods to be able to identify phases within the market and also be able to predict it more, accurately. So this chart on my screen is a screenshot, is sorry, the trading view of analysis I made within the Telegram community. All right, so there's a community on Telegram for those of you who are new, where I share my charts on a daily basics, to help everyone understand more what's happening in the market. So you can join the Telegram community to get analysis from me for free, keep in touch with other traders and know their perspectives and predictions of the market. So the community is on Telegram. The link is in the description. Also, you can get the official ebook on Wyckoff, which is available on the Telegram community, which is displaying on the screen right now. This is the analysis I made, which we are going to be observing today. As you can see the description, it's a concept which I identify as a redistribution. So this is the before, and it was sent on the 20th of August. And then the result has not been updated during the time of this recording, so you can't find it yet on the channel. But I'll be uploading it with the recording of the video, so everyone can also go through it and understand how I got that prediction and how I came to that in the first place. So you can join us on Telegram to get ebooks and knowledge from me on other concepts like smart money concept, the inner circle trading concept, Elliott wave concept, and supply and demand concepts. I don't just know Wyckoff, I know most of these concepts as well. So back to the agenda of the day, we have distribution to discuss about. Now, the ebook link is in the description because I'm going to be reading a lot from the ebook. So I need you guys to also go get the ebook so you can understand most of the things I'm reading. And while I read them, I know you guys are also having your free time to go through these ebooks as well. Okay, so on the ebook, which has more details about Wyckoff, the phases, the laws, how to apply it, all stated clearly in the ebook. Today, I'll be reading about, explaining more about the distribution, which the distribution is a concept, which is like the opposite of an accumulation. So an accumulation happens in the turnover of a bullish trend to a bearish, from a bearish trend to a bullish trend. Okay, while the distribution happens in a turnover from a bullish trend to a bearish trend. So an accumulation happens on the bottom, where price goes to the top, while a distribution happens on the top, where price goes to the bottom. You see, so the accumulation and the distribution has more in similar than a distribution and a redistribution. This is another thing you need to be aware of. But they have similar patterns and schematics within them. That is the redistribution and the redistribution. On the accumulation, you have different terms, which is similar with a reaccumulation. Okay, so on the YouTube channel here, we have multiple short videos that break down this concept within 15 seconds. All right, so you can go watch the shorter videos too while you go through the ebook. If you really, really want to know how to use this method, all right, so I'm taking my time to break it down so people can also end up using a very, very efficient method rather than smart money concept. Okay, so um, that is one note you can take for the distribution. It happens in the turnover, which is the reversal point of a bullish trend to a bearish trend. Okay. And secondly, the distribution happens at a reversal consolidation. This is where the concept of the redistribution comes in. As you can see, if you remember on the episode 1, we talked about the phases of the market. The up phase, which is the bullish, the trending phase, the consolidation, which is the decision phase, and then the downtrend, the down phase, which is the bearish time. So there are three major phases in the market. The phase which the market is not on any direction, it's just moving sideways, which is this one, where you can find the schematic and an early entry. And then we have this phase which the market is bullish, which is this one. And then we have the phase which the market is bearish. Now, if you're looking for a distribution, it has to be a point where you are expecting market to turn over, which is like a reversal point. Okay, so a distribution is happening at this point. While a distribution happens at this point, while a redistribution happens at this point. All right, so a redistribution happens at a consolidation phase of a continuation trend. Let me clean this out so I can break that down on the screen. So, the market doesn't just move in highs and lows. It makes this, little consolidations on lower time frame and then bigger ones on the higher time frame. So it moves in more of, decision-making points. So if you're looking for a distribution, it has to be at the point where the trend is changing, which is the phase of the market is changing. Okay. And it has to be changing from bullish to bearish, unless you're looking at an accumulation, which is the one that happens at the bottom here. I'm trying to make this as clear as possible so we can follow up. Okay. If you're looking for a redistribution, or you happen to be looking at the market at the time when the turnover has already happened, you can spot that there's now a bearish trend, which is lower low, lower high, lower low, lower high, lower low, lower high. The market is now bearish, and you think the market is still bearish for a longer period of time. You're looking to get an entry, and you find the market at a decision point. Let's say the market was at this point, right? So you happen to come to the market and you find something like this happening. So you're looking forward to getting an entry from within this consolidation, which you do think the market is not about to turn over, because if it turns over, then this is an accumulation. Okay. But if you think the market is still bearish and you want to look for something like this, which is a downtrend, then this is not going to be called a distribution anymore. It's going to be called a redistribution. You understand the difference? So if a distribution is spotted at this area where market is reversing, it's a distribution. If it's spotted at an area where market is still in a phase, it's a redistribution. So they are redoing this thing. That's why it's called a redistribution, redoing of the whole distribution concept. And same goes for a bullish trend. If you are in a bullish phase and not actually in your traditional consolidation period, and you see the markets at this point where the trend has already, kicked off. So it's not at, let's say, a major turnover from a bearish trend to bullish is already bullish. So the accumulation has already been spotted. So You now want to understand what's going on within this point. You won't call this an accumulation anymore because the accumulation is facing up from up, which is rally, base, rally. All right, so this would be called a reaccumulation. If it's a drop, base, rally, this is a concept from supply and demand that I'm explaining for you. Those of you who are familiar with supply and demand, you will understand what I'm saying. Then this is an accumulation. But if it's a rally, base, rally, this is a reaccumulation. If it's a rally, base, drop, it's a distribution. If it's a drop, base, drop, it's a redistribution. This is a very important concept because it helps you to know what to look for at a particular time. You can watch the video recording over again, so you can understand the concepts very well. But Wyckoff basically is here to help you understand what is going on in the market. So these basic principles, other than just understanding the meaning of these words, are principles that can guide you in certain markets, especially when the market is consolidating, because Wyckoff tries to explain why there are multiple highs. That's why you see on the schematic, you can see multiple highs, So the entire concept of Wyckoff is to help you understand if you cannot spot a swing point to clearly identify something like this. So you can get an entry from here, from here, from here, from here, and you're finding yourself in a market that looks more like this. And it's just moving sideways, but it's still moving, and you want to get an entry, then you have to use the Wyckoff method because it was built for markets like this. And mainly the concept was built for the stock market, but these days I find it very efficient on the on the Forex market as well, even on crypto. You can find multiple charts on my Telegram community where I've used Wyckoff. You can also find them on Instagram. We have an official library on Instagram where we usually share shorter videos that explain most of these concepts, Wyckoff, smart money, supply and demand, so you can join the Telegram community and the Instagram to get shorter videos other than longer ones like this. Okay, so this concept of the distribution, we just made few things clear. I just hope you have been following up and taking notes so you can know how to use them. Secondly, we move to the phases of a distribution. Okay, so a distribution has phases just like an accumulation. The phase A, phase B, phase C, phase D, and phase E. Please get the ebook, it's free, because most of these things I'm explaining, the basic explanations like what is the meaning of a buying climax, because these terms, BC means buying climax. Buying climax also means something, okay? And most of these things were already broken down in the ebook. So I'm not going to be going over that on the videos. I'm going to be explaining how to use them on the videos. So you can go to the ebook and read the phases so you can understand. The composite man you're seeing being called here is basically a name for institutions. So how we say we know that somebody is controlling the market, this kind of stuff, there's this belief, is a belief system that institutions are collectively manipulating the market, which if you look at data and the movement of the economy, you find out that it's highly very possible that there are people who can manipulate the market with their equity collectively. Right. So these are the big players. On the Wyckoff concepts, we know them as the composite man. That's why you see me using the name here a lot. A lot of people are familiar with the name composite man, those Wyckoff traders. But on SMC, we call them the institution. On supply and demand, we call is there a name for it? I don't know. But the most popular name is the institution. These are the guys that do manipulations. So most of these concepts have been explained in the ebook, and you can find out there to really help you understand what's going on. Now, the phases, the phase A, phase B, phase C of the Wyckoff is as similar as that of the accumulation, but on a reversal. All right, so on the episode 2, I explained that as well. And you can understand that since the market is coming from a bullish phase to a bearish phase, there's going to be the same phase B that does more of the manipulation. Okay, so if you look at the phase A, when the market starts to make the visible support and resistance level, which the consolidation will be happening, and started creating multiple highs that starts to confuse individuals, were in the phase A, where you had this low getting stopped out by this guy, but price still not respecting this strong high and going, to clear out a major swing high, which on a normal structure, this would be seen as a bullish structure. Okay. On a normal structure, we would say this is a break of structure, this is a break of structure, and then we look for entries from here, right? Looking for entries from here to do what? To clear out this high, to create a new higher high, which is this guy, and then price returning back to discount, to continue the trend up. Then ultimately there's a major reversal, that then price goes the other direction, clearing out liquidity from those who were holding this point. So the concept of the Wyckoff also, as you can see, is basically explaining how manipulations are done and retail traders are being liquidated. So the founder of this concept, Mr. Richard Wyckoff, really did a very, very great work by creating things like this, because it gives you a storyline to be able to identify possibilities of how institutions can manipulate the market simply by giving patterns within market structure that can be observed by analysts, and then these details can be given to big institutions to make decisions on. So it's very possible, and I've used this countless of times, that I can say yes, with price action and these concepts, you can really actually predict the next move, like that which I did on the chart. So the phase A basically gives you the support and resistance level from the buying climax to the automated rally. So this rally is a concept that after the buying pressure that came in from the bullish trend are now being slowed down, there is a corrective rally, a corrective bearish rally that happens, but still maintains the previous structure, showing a little a momentum to the bearish side, right? And then there's an internal structure that is being built, to create this concept of a changeover. So as you can see, this creates a high, a low, a lower high. Ultimately, you'll be expecting a lower low, expecting structure to have changed, okay? But as you can see from here, the official swing low of the previous structure was not broken. If price really broke structure, then price would have gone below this low. Do you understand? Which means all these were just mitigation of a supply zone, which happens to be around this area. Okay, of a supply zone, which happens to be around this area. So this would be, if you're looking at this from the perspective of smart money concepts, which would be very difficult for you to look at when you're thinking of markets being bullish. And if the Wyckoff wasn't there, you wouldn't have thought of that in the first place. So you would see this would be liquidity, this would be a fair value gap, and this would be price mitigating either the fair value gap or maybe a week into the supply zone. So if you've been following me on smart money concept and the classes of smart money concept, you would understand what I'm trying to explain here. If you have not, go and watch the videos. They are all available on YouTube. So you would understand that this likely is a very, very common pattern to understand if you start to see it from that perspective. And looking at this, you will find out that we created a double top, which will be a symbol for liquidity. A lot of retail traders who trade support and resistance will be likely to enter from here, which you can see why the manipulation is very, very effective, because retail traders see this as an entry pattern while it's being used as an inducement for price to go higher. Right now, after price clearing out this, and then you see a break of structure from this point, this can also be an entry level for you to ride price to an even lower level. That is if you are aware of what's happening and why all this is going on. you are saying, I think a distribution is coming up and let me focus on internal structures and trade the lower time frame first till the higher time frame decisions has been made and then the trend is now bearish or bullish again. So instead, instead of you to start looking for swing positions to swing markets down, you shift your perspective to looking for scalping positions where you can get quick 50 to 100 pips while the market makes its own decision to where it's likely to move to. Because the Wyckoff is more effective on the higher time frame, like the daily, the 4 hour, the weekly. So you can still use those perspectives on the higher time frame to look for lower time frame entries around the 1 hour, the 30 minutes, the 15 minutes, and then you get entries quick in and out because in all, everything moves in structure. As you can see, it's still respecting structure, just lower structures in bigger structures. That's what we are doing. So this is a breakdown to why the distribution works. And I'm trying to give a different details from what we gave to the accumulation in the episode 2. So when you watch the accumulation and you watch the distribution, you can put the two episode information together and then look at them from two different perspectives. On the episode 2, I broke down the meaning of these things and why these phases exist. On episode 3 on this distribution, I did not break down these phases or why these things exist. Instead, I'm breaking down smart money perspectives of how you can see the distribution. You can use the same perspective to go and look at the accumulation, and you will find exactly the same thing existing within them. You can see it was also explained in the ebook, which is why you should get this ebook. You can see liquidity being cleared and your supply zone being mitigated, liquidity being cleared, supply zone being mitigated, although we had a stop point. Demand supply zone being mitigated, clearing out liquidity. Demand supply, demand supply. So you see, it's the same thing. But on the higher time frame, what will you see? Drop, base, rally. Do you see mixing concepts together? PO3, just using three different concepts and trying to get what you want. You understand? So when you watch the episode 2 and you do episode 3, try to put the information together like you're coming from two different angles, okay? So let's move to the charts. So I'm using a live analysis from an analysis I made. My reason for this is because I want you all to also see that it's possible to identify these stuffs. On this, we have a redistribution, which is very similar to a distribution, just the phases and systems are different. But what I did was still the same. The first thing I did was identify my structure, which you can see we are in a downtrend. We had a manipulation here. On one of the videos on the Forex mentorship class, I think episode 6, I taught you guys about how when price do things like this, they are heavy manipulations and it's a sign that market is not really going anywhere anytime soon. It's just manipulating towards that direction. That's to say, price is not bullish and this is not a break of structure. This is instead a manipulation because if you turn this to the line chart, it doesn't exist. You see, on the line chart, you have a simple break of structure, manipulation, and price is just moving towards this direction. But on the candlestick, you're seeing things like this. So you see, you have to pay attention. And these were quick moves. So these are manipulation. This is what we call the composite man, and that concept, that and that. So what I did basically was identify the direction. And although I could have easily done this as my high, but I felt more safer doing this because that would also give me the concept that this liquidity was cleared out. So there's no liquidity above anymore. If price goes bullish, is likely to clear out this high. Okay. So secondly, I identified my supply area because I looked at what this is premium and this is discount. Okay. So is this a turnover point or a continuation point? Remember what I said earlier about the distribution and the accumulation stuff, and then the redistribution and the reaccumulation. The reason why I call this a redistribution is because we are not at an area like this, where price was coming from bullish to bearish. We are instead in an area where price is going from bearish, and I'm expecting more bearish, which is a drop base drop. That means this is not a distribution. This has to be a redistribution. Do you understand? So after identifying this area and my structure, I had to identify the trend so I could know what's schematic and what am I looking for. That was why I had to identify this as a redistribution. Okay. So I then paid attention to the consolidation, which was why I used this tool to see where was, the equilibrium level and the level which the um, market is being played at. As you can see, this was liquidity being cleared, liquidity being cleared. Clearly, this is Wyckoff. Mitigation, and then sign of weakness, then liquidity also being cleared. Entry level, stop loss will be around this level, and then TP will be around this level. You see, so using this is easy if you look at it from this concept. Before, these words you might think are the most important things. No, the most important things are the principles and laws governing the concept. You can identify this wrongly, but if you can identify the principles and the concepts around them correctly, you can even have a higher winning rate than those who claim to be professionals in using Wyckoff. Okay, so now, if you notice something, price did not mitigate the supply zone, which means this is also liquidity, and price might be heading bullish very soon. Okay, so that makes this area a point of observation, because if price is going to be going bullish, is either we're getting stopped out from here, and then we see something like this. All right, and then, price keeps going bullish. So you have to be one step ahead by trying to identify these things correctly. That's just the difference. That's just the whole theory of technical analysis. You are trying to get a perspective that explain what's going on. Basically, this is GBP AUD. So GBP is the currency of the British, the British pounds, and AUD is the currency of the Australian dollar. And this is the 4-hour time frame. Obviously, we know these concepts we are identifying are not what is happening in British and Australia, but at the same time, this is what the technical charts are explaining. So we are trying to get one step ahead with a different storyline to be able to understand structure. Okay, so that was how I got this as a redistribution, and then I made the prediction in the community. That was on the 20th of August. And this is simply how I just use my Wyckoff method. Okay, so these are some of the trades I took, basically from structure. And this is how I trade Forex. Okay, so for those of you who are new to the concept and you're interested in learning, join the community, engage with other individuals who are familiar with the concepts, keep learning and keep watching the series, go get the ebook, and then you can see yourself developing over time. Remember, you have to give time to yourself to grow. You don't expect yourself to know everything at every given time, every minute you just watch. No, you grow with the knowledge as time goes on. Okay, so the more you keep watching and the more you keep practicing, the more you keep seeing progress. All right, so this is what we do. And on the episode 4, I'll be looking at the concept of distribution and redistribution, trying to explain those more further, and then we'll keep going into practical examples like this. All right, thanks for joining us. See you on the next episode.